Hey, it's Ryan from the Option Income Advisor, and today I'm going to give you tips on how to handle your cash secured put trades post-assignment. If you've ever heard yourself saying, help, or I've been assigned, and you don't know what to do, I'm going to walk you through everything today. It's pretty simple. It's the point in the triple income wheel when we sell covered calls, okay? But it's not always just run out and sell a covered call right away, or sometimes even selling a covered call may not be the right move, right? Maybe you decide to hold on to the stock, roll the position. I'm going to walk you through all of your quote unquote options post assignment today, because it's really going to help you just get a feel for the strategy, right? So let's recap on what the strategy itself is. So, looking at the triple income wheel here, so this diagram, right? And I've got this big, red pointer arrow here. You are here. You're on step 3, the sell the covered call. So I'm just going to walk you through, and a lot of you have been asking about this anyway. We do these trades of the day, and the trades of the day aren't supposed to necessarily be a true model portfolio, but what it is I take a stock from my master watch list, stock that I think is a good cash secured put play, and I walk you through my analysis of the stock and which cash secured puts I think are appropriate. And so what I've done is just taking I've kind of analyzed all of the trades that I put out that had the July expiration, which was expired last week. And so just to walk you through, we had 13 different trades that week. 9 of them expired, and the other 4 were assigned. So again, when we sell a put, our next step in the process, right, is the put either expires or we get assigned. And so, like I said, our goal obviously is to never get assigned, but it's just part of the process. We do get assigned, and in fact, a lot of my better trades have come from stocks that I've been assigned. And so if we back up one step up here, we never sell a put on a stock that we don't want to own, right? And so I always stress, and you guys have probably heard me stress this, like you've got to pick the stock, then you pick the option. And that's why it's so important to just have a master watch list of stocks that you will go back to time and time again. These are stocks that you don't mind owning, stocks that you, if you had a buy and hold portfolio, you would consider, just buying that stock outright. These are the perfect candidates to write cash secured puts on, because if we do get down to, step 3, and it's a stock that we do get assigned and we need to write a covered call on, it's a stock that we don't mind holding for maybe a month or 2 or 3. And so that's why it's so important to pick the stock first, and then the option. So you can see, again, there were nine of these trades that expired, but we do have these 4 that were assigned. Okay, so these were assigned last Friday, and we can walk through some of the prices here. But typically, what happens when you get assigned, and just so you know, and this is kind of just if you're new to this process, just kind of what to expect, right? I always try to tell you what to expect so you're not caught off guard. And so typically, what happens is if the market's trading up, most if not all of your cash secured puts will expire worthless, right? There may be some individual situations throughout the month that maybe there's again company specific situations that you might get filled on or kind of caught you off guard, but for the most part, a lot of these just kind of trade with the market. So if the market's up, you're gonna have months, even a string of months, where every single put you write expires worthless, and then you're gonna have months where the market trades down, and we've gotten some volatility, and you may get filled on 3, 4, 5, 6, 7 positions, depending on how many positions you have on. And I typically have 30-ish positions on it at any given time, just to diversify it out. And so, having 4 get filled isn't the end of the world, and it's kind of to be expected. And it comes in waves. Again, like I said, typically they either all expire worthless or you get filled on a couple, right? It's usually not just like a one-off thing. So, and it all kind of depends on the broader market. So when you've got a situation where the market's pulled back, or like we've had right now, and you can see the stocks that I've got assigned, Boeing, Wynn, and Carnival, these are all reopening, cyclical names. They had a very rough end of the week. They had an even rougher Monday this week, right, where the Dow traded off 700 points, and we were stuck with those stocks. And so it's a perfect example, and I'm glad it actually happened, because we rebounded yesterday on Tuesday, where you don't need to panic. You just need to take a step back. You don't need to run out and sell a covered call immediately right away, right? You want to be measured in your approach, right? When you end up taking ownership of a stock, I think it's always good to take at least a day period just to think about it. Understand the stock that you're in, understand the price that you're in. Obviously, you had gotten into it at some point, right? Because you picked that strike price that you thought was a good price to buy it at. And so don't be afraid that you bought it, because it's almost a good thing, right? It's like, hey, I picked this spot, and I got filled on my trade, right? It's almost like setting a limit order. And so kind of be happy that you're in it, and don't be so eager to run out and just sell a covered call right away, because there is a certain amount of timing to selling a covered call. You want to, just like we like to sell puts into weakness, we like to sell covered calls into strength, right? And so knowing what happened, last week and early this week, I know that these are all stocks that I want to own, right? I want to own some of these cyclical stocks going, into kind of this post-pandemic, way of life. And, I think that, some of the scare with the Delta variant is kind of overblown to the point to where these stocks are getting hit again. And, I just feel like there's much more upside left to them. So those are stocks where I'm going to take a look at, and I've already taken a couple days to think about it and say, are these stocks that I just want to hold maybe for a week or so before I sell a covered call, right? Do I really want to sell these at depressed prices, or sell calls while the prices are so depressed, where I'm not getting, enough premium or enough upside for my calls? Why not wait a couple days and just kind of see how the market reacts? And I'm glad I did that, because, obviously on yesterday of this week, all of these stocks came roaring back. And so now we're in a much better position than we were, end of day Monday, or even on last Friday when we got assigned. And so again, just walking through this process, these stocks that we did get assigned on, these 4 stocks, we now have to enter this covered call zone. And the first thing I just have to reiterate is just be patient. Take a couple days to think about it. I'm not a big proponent, and I see this written a lot out there, that instead of taking ownership of the stock, take an assignment. Sometimes people will try to, if they haven't got filled by expiration, they may try to buy the option back at a loss, and then try to write another similar option, kind of rolled into the next month at the same strike price, and try to get a credit, which is fine. It's not the worst thing to do, but it basically what it does is it locks in your price. It locks in your upside. I don't really like doing that way, because either way you've got the downside of the stock. Because if you for example, if you're looking at Boeing, and I think we wrote like the 220 put or something, and the stock had traded down to like 217. if you ran out and just bought the put back for $3, for example, and then rolled it out to the next month and wrote the $220, because this is in theory what you need to do, right? You need to buy that back for $3, and then you need to sell one out in the future for even more. So you know, whether it's $4 or $5, whatever it is, to get a credit for that. Well, you're still on the hook for all the downside of the stock, right? Because you're basically selling an in the money put. I'm not a big fan of that. I like to say, let's take ownership of the stock, because a lot of these have paid dividends, right? So if we're going to hold it for a few months, I'd like to A, at least collect the dividend, but B, I want the ability to wait to see if maybe that stock rebounds immediately, right? And have the ability to wait to sell that covered call. And again, you don't want to try to time it completely, because you know you can never time the bottom or time it perfectly, but you can, I think, put the odds in your favor by just allowing this stock that you again have you've picked the price, it now hit, and you own it, right? So again, you almost got to look at it as a rejoicing moment instead of a scared moment of, okay, great, now I got filled on that stock. What am I supposed to do with it? And what if it goes down further, right? There's always these what ifs with this strategy when you get filled. Best thing you can do, again, is just be patient. And I'm going to walk you through my whole process here. I'm going to walk you through, you know, what I've done just to keep track of this, right? And we use the Option Income Advisor website to do that, right? That's the whole, you know, one of the big values of that is being able to stay organized. So when I get filled on 4 stocks and I know I want to write covered calls on it, well, I'm just going to create a covered call watch list, right? I'm going to create this watch list that I can then watch over the next few days or a week before I write a covered call. And that allows me to kind of maintain and focus on, okay, well, what premium yield can I lock in, and how much upside profit is there available for me, right? Those are the 2 big things. And so, you know, again, when you get to this stage where we're selling a covered call, just give yourself a few days. It's probably the best advice I can give you. Give yourself a chance to get organized, and again, I'm going to show you exactly what I do to do that. And you know, the nice thing is, you know, on expiration day, you usually typically have even in a down month, you typically have more options expiring than you do are getting assigned. So also keep in mind that, you know, when those, if you're getting assigned, it's typically probably because the volatility's gone up in the market, and so you get to rinse and repeat these trades that expired at much higher premiums, right? So also keep that in mind. So it's just a, don't be scared during this time, because there's tons of value that can be added, right, by just, again, using some of your cash to sell higher priced premium puts, and then just being patient with selling calls, because again, your calls are juicy as well as the premium and volatility increases. So let's take a quick look at the website here. And so I'm just going to walk through. Remember, we had a few different stocks, and I'll do the easy one first. So Teladoc was one that traded down on Friday, but then ended up getting support. So we barely got hit with this one. I think it traded down to maybe 147, and we had the 150 put. And so you can see now, yesterday, as of July 20th, it closed at 155. So we're already $5 ahead of our price. So had I immediately either bought back that option and, you know, sold another one out, or you know, Monday morning when the market was going crazy, went out and sold a call immediately, well, I would have given up a bunch of, you know, upside, right? Because what happened is I knew what was what the overreaction was. It was on all the cyclical stocks, so I figured, well, Teladoc should be moving inversely to that, because that's more of a stay-at-home play, more something that people would go to during, you know, the pandemic like we had. And so I was just patient with that one, and it kind of paid off. So, you know, I actually sold a call on this one yesterday, so Tuesday, and I sold the 160 at like a $7 premium, right? So I mean, this is a significant upside now. So we basically turned a small loss at expiration, because we got assigned at 140. We were at 147. We got assigned at 150, but now the stock's significantly higher, and you will find this happen a lot if you're right on your price. And so that's why I always say to be patient. So you can always scroll down on the option income advisor website, and again, I'm looking at August monthly options, and you can see I've already added some of these. So those of you that haven't used the watch list, so you can just go down to the covered call watch list or the cash secured put watch list if you're looking for those kind of trades. Right now we're focused on covered calls, but you just basically click this little heart to add it to your watch list, right? And so we know the stock's at 155. We know our cost basis is 150. And so basically what I try to do is pretty simple. I try to write a call. Anytime I get assigned, I try to write a call, higher than my cost basis. And so, our actual cost basis on this trade was right around 148.50, because we got about a $1.50 for our put to begin with. So our real cost basis is about 148. But my strike price, the one I got filled at, was 150. So if I can get above that, that's kind of the goal. But because the stock's already traded up, now we've got a built-in kind of profit or cushion there. And so now we can write, if we wanted to, right, we could write the 155. And again, I'm just going through these so that you can get just in the mindset, because this will happen to you. And hopefully you can come back to this video, even if these prices aren't relevant or these trades aren't relevant. It gives you the idea of kind of what I go through when I'm looking at these trades. But so this stock, we could either get $8.73 for the 155, which gives us average monthly yield of almost 6%, which is incredible. And so the upside profit is basically it's the premium we get. So it's the premium we get plus the difference between the current price and the strike price of the call. So basically any upside profit. So it adds those two together, and that's how you get the upside profit. And so the 160 you can sell for $6.55, which gives us a 4.3% average monthly yield and a total upside profit of 7.6%. Look, if we can get that all day. All day will I do that, right? So that's an additional $5 above this current price, and it's basically $10 above our initial strike price. So this is going to be a huge win for us if we end up if the stock ends up staying at least these levels or trades a little bit higher, because these premiums for these calls are extremely juicy. And if you wanted to let it ride even further, again, this is why I say just take your time to think about the trade, think about the stock, and think about maybe where it could go over the next 30 days. And there's nothing to say that you have to sell a covered call, right? It's just a tool that we have to, generate additional income and try to get rid of the stock so we can rinse and repeat, right? But if there's times like this where I feel like these cyclicals have sold off significantly, we know why they're selling off, right? We've got a scare out there again. Well, why not hold on to it, right? And, we may hold, you may want to hold on to this one for another couple of days, kind of see what happens. And then, maybe sell the 170, give yourself a little bit more upside, right? There's no real right or wrong answer here. You're just basically managing the portfolio now of stocks that you own. And you've got this tool, the covered call, to just enhance your return and manage your risk, right? And so the 170, again, it's 2.3% average monthly yield and a 12% upside. So again, I wrote this one today. I thought it was, you don't want to be a pig about it either, because a lot of times you'll say, well, I'd love to get this upside profit of 12%, but just keep in mind, this stock's got to trade up another $15, in the next 30 days, for you to achieve that, which is fine. But if your goal is to balance that, well, if I'm going to sell a covered call and I'm going to lock in some upside profit if it does go through my strike, I'd love to sell it, right? And so this is a more than generous right, return for a 30-day period, if you can do that. So that's why I picked that one, but I like it, and I'll show you in a minute my watch list where I've got all of these on there. And so that's a very helpful tool to have, just to stay organized. That way you don't have to keep coming back every time and say, well, which one did I want? I can't remember. You've kind of locked them in and put them on your watch list. Okay, so let's do one more. Let's look at Boeing, for example. Again, I'm just typing the ticker up here. Anytime I get assigned, I literally just go into the site and scroll down to the covered calls, and you can see I've already, just in the interest of time, I've already kind of pre-populated or pre-added some of these to my watch list. So again, this one, we got assigned at 220. Last Friday, it was only down at like 217 or 218. So again, barely got filled. But then Monday, we had a major sell-off. And then Tuesday, the stock bounced back quite a bit. So, now we're sitting at 217 again. So the stock was up $10 again today. And so we're right kind of back where we were. So we're not too far off from our cost basis. So our cost basis on this one was about $118.50 because we got $1.50. So we subtract that from the 220. And so, I'm sorry, not $218.50. So, the one I'm looking at initially, let me scroll down, would be this 220, right? So the 220 gives us, again, it's kind of the similar mindset of the cash secured puts, right? You're looking at, your average monthly yield. What are you yielding off the capital, right? Because our goal is always to make as much income as possible off the capital we're using. And when we own a covered call, or we own a stock and potentially write a covered call on it, you're using that capital up, right? You're using the capital that that it costs you to buy that stock. And so how much income can you generate off of that capital? Well, that's what the average monthly yield is, right? And so the average monthly yield on this 220 is 3.5%, which is amazing. And we got an upside profit of 4.8. Or you could go up to again, this is where you analyze it and say, well, I liked it. I liked the stock at 220. I think it could absolutely go to 230 in the next 30 days. I always try to get at least 1 to 2%, because with covered calls you can get really juicy premiums kind of compared to because you're writing more at the money or slightly out of the money calls, so your premiums are gonna be much higher. So I try to target at least 1.5 to 2% on the low end, right? And so if I'm looking at this one, I probably wouldn't go much higher than 230, but I would probably choose, and I probably will, as this week goes on, I'll be looking at the 225s or the 230s, right? That gets me right in that wheelhouse of about 2 to 2.5%. Still a decent upside. Again, any of us would be happy with these returns, assuming these stocks trade up. I mean, we're going to have a 6-7% return on all of these over the next few weeks, right? Okay, so that's Boeing. So the other one we had was Carnival. So let's look at Carnival. And again, I'm going fast here because just in the interest of time for this video, but you kind of get the idea, right? I scroll down and I've already pre-selected a few. But all I'm doing here, folks, is I'm just analyzing these two columns, right? I'm looking at, potential calls that are above my cost basis, right? And so my cost basis on this one is $24. We got assigned at $24. So basically anything, kind of below this line is what I'm looking at, right? So worst case scenario, I want to at least break even on my stock, because then I'm really truly getting that full yield I was looking for, right? I get to keep the yield from the cash secured put, and then I also get to keep this new yield. And so on this one, again, like I said, I want to try to get at least 1.5%. So I would be limited to either the 24 or the 25. And this one traded down quite a bit. This one was down. Let me see where it closed at. So it closed Tuesday at 21, but this one was down to like 18 or 19 bucks. At the low on Monday. So this one I traded down significantly, right? But this is a volatile stock, and we're going to get, continued probably big moves like this. It was up 7% yesterday. So we're still a few dollars off the top, but those are the ones I want to watch, right? But this is again one that's going to be so volatile that I want to watch it for a few days, right? I don't want to run out and sell a covered call right away, but I do want to watch the covered calls that I'm interested in, right? These are the ones that are going to make sense for us as the stock trades up. And you can always add new ones. For example, if this stock trades up, another $2-3 tomorrow, again, you don't want to be greedy, right? Once that thing, approaches or gets past, your assignment price, you want to think about selling a covered call at that point. I'm just talking about these stocks that maybe have traded way below your strike price. You don't want to go out and just fire sale a covered call for no reason, right? Just hold on to it and make sure you understand and you at least get the value out of what you feel that stock should have provided you, right? And so those are the few for Carnival. And then the last one we are going to look at is Wynn Casinos. So we'll type in Wynn, and we will go down to our covered calls. And again, I've already pre-added some of these. So our price on Wynn was $114, and we sold it for about $1. So our cost basis is $113. And so Wynn's kind of nice. It trades in dollar increments, and so you could really, in theory, you could add all of these to your watch list, but I just kind of picked a few. So I know the 115 is going to, get me out at break even at least. And so what I tried to do was just pick a couple, the 115 and the 120, those round numbers are probably always going to be the most active. And so, again, I picked this one for my watch list, and then the 120. All right, so we've got, if we're looking at our average monthly yield and upside profit, we're looking at 2.2% here, and then about 1.3% down here. So again, just adding a couple to our watch list as this stock trades up. And again, I believe this stock, I think Las Vegas is going to be one of those destinations, because I think it's going to take people a while to want to go overseas, but traveling domestically, I really feel like is going to take off, towards the end of the year. And I think Vegas is going to be, one of those destinations people go. And so I do like all the casinos just in general. And so I want to hold on to it, right? I want to get the value out of it that I thought was there to begin with, right? And so just going through this process where you can add these options to your watch list is just so helpful when you get assigned, right? Again, it helps us do, my number one rule kind of is just be patient, right? Don't run out and do something crazy just because the market's, you can't panic in a market that's down like that, right? The last thing you want to do is like on Monday, for example, was to sell a bunch of covered calls into weakness, right? Because you're going to get the worst prices possible on your calls, right? You don't give your stocks, any chance to rebound whatsoever. So just take your time and set up some watch lists like I do here. And honestly, if you need help doing this, give me a call, email me. we will help you, set these up and help you stay organized. That's the value of utilizing this website and this service. So let's go to our call. So I created one called Trade of the Day. So these were just our base trades. And if you traded the conservative or the aggressive, it's similar concept, right? If you got filled, you're just going in there and trying to find a similar option to your strike price or your assignment price. So here's the value of being able to build a watch list. So now I have all of these individual options on my covered call watch list, right? And I've got it sorted by company name and then by option premium. And so I'm going to watch these over the next week or so. And as we get up days, I'm going to reassess and figure out whether or not I want to sell the covered calls, right? And so, this data updates at the end of the day every day, and so will, our key metrics here, right? So our key metrics of average monthly yield and upside profit will update as the stock, moves, and we can decide whether or not we want to take the trade. And so every morning, I'll come in here and I'll kind of see where these trades are. I'll take note of, and hopefully this is helpful, just so you can get in the mindset of kind of what I do as well. I'll take note of the current price of the stock, and I'll immediately look for these 4 stocks to be in the green, right? And if they're in the green tomorrow, that's when I may start reacting to some of these, right? If they're in the green tomorrow and they get closer to my strike price or the assignment price, I'm going to immediately try to start writing covered calls. Because if, for example, Boeing is at 217. If Boeing goes over 220 tomorrow, well, 220 is my cost basis, or it was a little bit below that because of the put premium we got. But I'm going to immediately look at it and say, well, this 225 and 230 probably look extremely good at that point. You can get really nice, juicy premiums. I'm going to go ahead and lock that in, right? Because if I can lock in a 6 or 7% upside just in the next, month, I'm gonna take that trade all day long, right? Same thing for Carnival. Carnival's up a couple dollars tomorrow. I'm gonna look at some of these trades. Teladoc, like I said, I already put it on because it was up big, but it was the same process, right? I waited for the stock to go up, waited for it to maybe get above my strike price or my assignment price, and then I reacted to it. And then same thing for Win. If Win's up, gets closer to my 114 price, that's when I'm going to start looking at these calls. And so again, what this watch list does is it allows you to organize the trades that you want to take, in the next couple weeks. And you can do the same thing for puts. You can do this for calls. It just helps you stay organized. And hopefully this video has been helpful. Again, just to recap, you're gonna get filled on things. It's nothing to be worried about. It's nothing to to panic about. If anything, these are the trades that you're gonna make more money on. But you want to be patient with them. You want to pick the stock first and then the option, and you really want to analyze that stock once you own it. Once you get assigned, you want to analyze why did it go down, what's the potential upside, and let me be patient with that call, right? Because a call is just a tool at your exposure. There's no there's no guarantee that it'll work. There's no guarantee that you have to sell the call, and it's a tool at your exposure. That you have at your exposure, and utilize it to the best of your ability. And the best of your ability would be to maximize your premium yield or average monthly yield, and then try to get as much upside profit as you can within that short period of time, right? And for me, I don't like holding a stock for too long. I like to take advantage of maybe a short-term pop if I can over a month or two. but I really would like to get rid of it if I could, and start my whole triple income wheel process all over, and start getting into different stocks, or even the same stock at a lower price, right? So that's my video on how to again, the tools that you can use, what to do, tips for you when you get assigned, and just tips for again, just managing a portfolio of trades for the triple income wheel, right? This is real life. This is not just fluff of a random trade alert, right? This is the meat and potatoes of what you do, right? If you manage this type of strategy, right, you're gonna get filled, and you need to know what to do with it. And so hopefully this has been helpful. Any questions? Let me know. Take care.